You have likely seen the screenshots. Zokera aggressively markets the idea of creators making thousands of dollars in their first month on the platform. But committing 30 days to build a profile on the wrong app carries a high cost. You risk burning your time and your early creative momentum on a system that might not work for you. To figure out if these promised returns are realistic, we need to strip away the survivor bias and look strictly at the data. This side-by-side chart compares the top 1% of marketed earners on the left with the actual median payout for a new Zokera account on the right. That median number falls far short of covering a standard monthly internet or electric bill. This low baseline has nothing to do with the quality of the content creators are making. It is a strict mathematical result of how the platform mechanics operate. If you want to know how you will fare on Zokera, ignore the hype. The only thing that matters is the mathematical baseline of a brand new account. Predicting your first month requires identifying exactly which of two distinct creator categories you fall into. The first category is the 0 to 1 beginner. You have no pre-existing audience, hoping Zokera's algorithm acts as an organic discovery engine to find one. The second category is the audience migrator. You already have a following on a free platform like YouTube or TikTok, and you've used Zokera strictly as a tool to monetize your most dedicated fans. This difference in pre-existing leverage dictates your entire experience. A successful 30-day outcome for the migrator is a mathematical failure for the beginner. What you earn in your first month on Zokera is determined by the audience you built before you ever registered for an account. The standard approach for a beginner is to post high volumes of content every day, trying to trigger Zokera's internal algorithm for reach. On this effort versus impact quadrant chart, organic discovery places you in the high-effort, low-impact zone. Heavy paywall friction prevents viewers from finding your profile, keeping conversion near zero. Over 30 days, you accumulate unpaid production hours while your revenue stays completely flat. Working that hard and meeting total silence takes a severe psychological toll. This specific early frustration is the primary reason beginners abandon content creation entirely. For a beginner, treating Zokera as your main growth channel yields a deeply negative return on the time you invest. The audience migrator strategy looks completely different. They spend their first month aggressively funneling their existing free followers over to their new paid page. This funnel illustrates digital conversion math. Massive user volume enters the top, but a tiny fraction passes through the paywall barrier. Creators expect a 1 to 3% conversion rate. But with a large initial follower pool, that percentage translates into immediate recurring monthly revenue. The trade-off comes from the other 97% of the audience. Pushing a paywall heavily risks alienating followers who feel they're suddenly being charged. Aggressively promoting Zokera links also clogs up the creator's free discovery channels, which stalls their overall organic growth. When a creator shifts their focus from building a community to strict monetization, there is a tangible loss of audience goodwill. Funneling your existing fans yields fast cash, but it trades your long-term reach for short-term extraction. To make that trade-off financially viable, established creators rely on a metric called revenue per viewer. Achieving a high revenue per viewer demands locking your audience into a high-tier subscription model, which means promising them exclusive premium content in return. Justifying premium prices requires a relentless, high-pressure production schedule. The consequences are immediate. Miss an upload, subscribers cancel, and revenue drops that same day. Hitting a high revenue per viewer on Zokera turns a flexible creative outlet into a rigid, stressful freelance job governed by customer service demands. This flowchart breaks down your decision on whether to launch on Zokera this month. It starts with a simple check. Do you already have an audience larger than 10,000 followers? If you are a beginner and the answer is no, avoid Zokera. Focus your time entirely on free platforms where organic growth is actually possible. If you are an established creator, you hit a second check. Do you have the excess weekly production bandwidth to fulfill premium content? If you meet both conditions, Zokera is a highly profitable channel that delivers a strong return on your investment by day 30. Zokera functions flawlessly as a monetization tool. It fails completely as a discovery engine. The massive first-month payouts you see advertised online are simply delayed receipts for the years of unpaid work those creators did before they joined. Do not build a paywall until you have a massive crowd already standing outside, demanding to be let in.